Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the 2021 Outlook series, host Craig Jeffery interviews George Zinn, Microsoft's retired corporate vice president and treasurer. They explore his career journey in Treasury, reflect on technology across several decades, and his perspective on what differentiates aspiring treasurers. Listen into this engaging conversation to find out more.
George Zinn, welcome to the Treasury Update podcast.
Well, I really appreciate your time, Craig. Thank you.
I appreciate you taking some time to talk, and I know we're going to talk about tech, but you said you wanted to grill me on some things too. What would you like to grill me on?
Well, I'm not going to call it grilling, but I was trying to recall as we were preparing as to when we first met. It had to have been more than 15 years ago.
It was. I think we met when we were. It was at an Alexander Hamilton Awards event, or one of the ones that Treasury and Risk was doing. We met, we spoke, and we seemed to run into each other at those quite a bit. And that was probably 15, maybe more than that ago. I think that's what started our connections with you and Anita and some of the other folks.
And then we almost launched a business together at one point.
We did a lot of stuff with your BI stack, and those were pretty exciting, interesting times. You've always been good to us.
Well, apropos of talking about technology, it would have been interesting if we were able to get that done.
Yeah, well, it's interesting. So much of that seemed so far ahead of what people were ready for at the time. And I think people now start to think about data connections, associations that, everyone thought maybe in rows and columns in the past. And we were doing things with maps, and you and your team and some other people really caught the idea, and others are like, I don't know that we would need that. And now people are like, hey, we need a data lake. We need to visualize how this stuff connects, and data's continued to double every couple of years, and now we got to get our arms around it.
You're reminding me, that was when we mapped all the bank accounts on a Bing Maps so that you could click on them and see the balance. That was pretty novel. I don't remember what year that was, but
that was, I think, more than 10 years ago. It was a long time ago. You could see it on the maps by type of accounts.
Right.
Just some great visualization. So that was a lot of fun. I think we even had research embedded in it with pulling up country level risk reports. And, yeah.
Right. The credit risk team was using that for credit limits.
Yeah. Yeah. It was neat stuff. That's I thought you were going to grill me. This was pretty easy. I was thinking, did you or did you not? Yeah. So this is George.
Well, that's
Zinn's.
what I'm afraid of.
I'm not going to grill you. I'll ask you questions that are all up your alley. I won't try to stump you. But yeah, we'll go from there. I think this is your first podcast. You speak all the time, everywhere. I think this is your first podcast.
That is correct.
So this is good. But you've been talking your whole life, so we should be in good shape. Now, everyone's familiar with Microsoft. Most people in Treasury are familiar with George Zinn to some extent, whether it's from the broader team at Microsoft winning awards, et cetera. But I don't know if everybody knows your journey in Treasury. We spoke about this a little bit before, and I know some of it. And I was wondering if you could give us an overview of your journey in Treasury. I know it didn't start at Microsoft, though maybe that's where most people know you more from.
Sure, you don't get much credit for anything before Microsoft, but I had been working 10 years out of school prior to that. It's interesting because I recently read the Steve Jobs Stanford graduation speech, and I don't know if you're familiar with it. It's worth a browse. He talks about the apparently random walk of his career, and then refers to it as the long look back. And the long look back, everything makes perfect sense. So one example in there was he monitored a class on calligraphy in school. And as a result, that's one of the reasons that you have such wonderful fonts in the Mac. It was fascinating to me because when I started, I did not come out of the womb like others thinking I was going to be a doctor or what have you. So when I graduated school, I'm from Detroit, and Detroit was flat on its back at the time. And so, like many of my classmates, I ended up in Chicago. Through an accident of the universe, I ended up on the floor of the Chicago Mercantile Exchange. And in another accident of the universe, I ended up in the currencies. Reality is that's where I really had my first post-college work. I worked for Shearson, then Lehman, then Shearson, Lehman, Hutton, never changing firms or people, just through mergers, and ultimately migrated out to the East Coast in the New York area, working for what would be today called hedge funds, but in yesteryear, or maybe last century, they were referred to as commodity trading advisors. And it was really buy-side investing. And the remarkable thing about my experience is that in order to land a role, I took the first opportunity, which was a back office job. And we worked actually in Lotus 1, 2, 3 in allocating trades across separately managed accounts. And I was able to move through the middle office, and then ultimately to the trader evaluation program at a firm called Tricon, who people may or may not be familiar with, but it's really a number of folks that were funded by Commodities Corporation that was ultimately purchased by Goldman. And as a result of that experience, I really look back, I believe that, landing in the currency pits, really created the opportunity, I joke, to fall through the cracks at Microsoft, because they had a real high-class problem. They had a lot of USD and a lot of foreign currency that they were trying to convert and mitigate risk with. And in addition to that, I had been working, as I said, cutting my teeth on Lotus 1, 2, 3, but also started moving to Excel. And in my work in Excel, I was writing what would be referred to as trend-following trading systems. And the irony is I used to call Microsoft and try and reach the Excel people and ask for features. And I wasn't confused that they weren't, that they were putting the features in for everyone, but they certainly were chunking out things at a very rapid pace. And Excel became the go-to tool. But I think the point of that story is that, again, it differentiated me from all the other people that ended up speaking to Microsoft in the mid-90s.
The what part differentiated you, the FX or the talking to them regularly about the needs?
Well, I think the FX was, again, an accident in the universe, having that experience. The differentiation, what I was referring to, is the skill sets that I was probably by accident at the time developing, just because I was trying to create the next world's greatest trend following system. That was a key learning for me, and we can come back to that. But at the time, that definitely was attractive to Microsoft, and ended up getting hired. And really, in the first I recall the first week. I started the last week of December in order, as I was told, in order to start my benefits. There was some special deal where if you were employed the year before, what they didn't tell me is they really wanted me writing in Excel the foreign exchange hedging system over the holiday. So I spent the first week. In fact, I remember I worked for 2 managers when I started, and the second one comment has always echoed in my head. It was something to the effect of, I don't care which of the 80 hours a week you work for me. But, so it was a very typical onboarding experience at Microsoft, I think, but from the 90s.
Awesome. Yeah, so on this technology front, I guess the idea of, from Lotus 1-2-3 to using Excel and becoming proficient at it. You were able to develop new models. That certainly mattered on the reason they hired you front. How did that impact the rest of your early career? While you were still, I guess you were more of a technology user, a tech pro at the cutting edge in those days.
Well, I wouldn't say, I mean, when you have to look back and think about Microsoft, I was definitely not considered a tech pro or cutting edge relative to the rest of the company. I believe that we were embracing technology in the group led by Jean-Francois Heitz, who I know you're familiar with, Jean-Francois really brought a number of great perspectives to the team, not the least of which was the embracing of the technology, but also a worldview that really helped, I think from a Treasury perspective, make the team a part of the global enterprise. I think it's very easy for particularly Treasury operations to become insular relative to the rest of the company as long as they're getting their work done. And I think that his worldview coming from as essentially a GM in France to the U.S. provided us with a perspective that was rather unique and beneficial.
Very open, or look at the big picture of the business. That's what it sounds like.
Absolutely. Look at the broader business, and as well as the international aspect, where he really understood how the money flowed around the globe and what country GMs were looking for, et cetera, and whether or not how to think about their forecasts and how to think about cash flow forecasting as a result.
This is useful. I've known Jean-Francois, I think, for probably 11 or 12 years.
Okay.
And you talking through that, I think, helps fill in some holes with that. So that's good. I'm gonna use that nicely in other conversations.
Okay.
we have a lot of good conversations from time to time. We were on one of the awards panels, and he's been doing it longer than I have. I think I've done it 11 years. Mm-hmm. And I frankly love it. And the fact that when we do these now, as opposed to just a phone call, we can see each other visually like you and I are doing on this podcast. We're not in the same room. And that is just so much better. It's a much richer experience than just the phone.
Absolutely. Because his gesticulations are wonderful.
Am I being too dramatic? So George, I know there's more on your early career, but there's an element about, as you helped adopt those, you looked broadly in the organization to meet their needs. What shifted over time, or how did your use of tech develop? Like, what were you doing with technology later on in your career versus your teams, what they were doing?
Well, I think one thing, I'm going to digress a little bit from the question and then get to what I think you were looking for. But building on the long look back analogy, I had been in Treasury for about 6 years and had pretty much done every job there was. And at the time, I was working for the then treasurer, Brent Kalinikos, who people may be familiar with the name. He became a Google treasurer, CFO of Uber, and so on. Very successful individual. But the point was, he was actually about 6 months younger than I was, and he didn't look ill. So I was trying to figure out what was next, and he was able to help me think about career and building on, I think, the legacy of JF. Look around the company, and I was able to land a job as the CFO of the IP&L group. And IP&L is intellectual property and licensing, and basically that gave me a panoramic view across the company of really the heart of it. Microsoft is a software company, but at the end of the day, intellectual property is what you are hawking, and the reality is you're never buying a piece of software from Microsoft, you're licensing it. When you fill out those big agreements that you don't read and click at the bottom, I agree. And we had a particularly interesting remit. Microsoft had hired Marshall Phelps from IBM, and Marshall had basically turned the IP&L group at IBM into a profit center. They were doing about $1 billion a year in outbound licensing at the time. And as a result, Microsoft was interested in having people take a look at the portfolio, which is interesting because I think that's one of the reasons I was able to land the job, the portfolio of intellectual property. And for those that aren't familiar with how it works, when you apply for a patent, there's a whole process, and there's servicing it as well as continuing to pay USPTO fees along the way. And there was a huge portfolio that Microsoft didn't quite have its arms around, and we really gathered that in a way that it hadn't been done before. And he oversaw the analysis of how you would think about what to do with various elements of the IP portfolio. So if you were to imagine a very smart engineer who obviously was encouraged and ended up gaining a patent. That was a big deal at Microsoft, but some of those were not businesses that Microsoft was going to go into. And the reality was they were very nice businesses, and as a result, we were able to create an outbound licensing program where people would license this IP or purchase it, and at the end of the day, pay Microsoft either a royalty or a sum. And as a result, having a very nice business, Microsoft was profiting off of its intellectual property portfolio. The fascinating thing about this is, as you fast forward in the long look back, one of the last things I did, and we'll touch on it later in terms of the end of the career, was really combine the knowledge of IP with the portfolio approach and thinking about Microsoft as a whole. At the end of the day, the cool part of that job was that I really had a broad perspective of Microsoft. And when Brent did leave to go do another job at Microsoft and the seat vacated, there was obviously tremendous competition for the role, and I don't believe that I was better qualified than any of my peers that had remained in Treasury and had been in Treasury for their entire careers, but I was differentiated because I had this broader experience, and I believe that may have been one of, or at least one of the reasons, not the reason, but one of the reasons that I ultimately got the seat. So again, a random walk, but that makes perfect sense in the long look back.
You're getting very reflective. This is good. Now, and thank you for that. I don't think I knew all of those parts before, and you talk about that, and you think about how now you've got the seat. You're the treasurer, and you've got roles with tech. There's roles with Treasury, of course, but how did your use of technology expand or change or accelerate? As you reflect back, what happened that was different, if anything?
Well, I think it's interesting. You put me at the time of when I first got the job, and I guess necessity is the mother of invention. We, at the time, had essentially two balance sheets. One was an international one. People would commonly refer to that as the trapped cash. And the other was the domestic balance sheet, which basically paid all the bills. And for those that are familiar with the previous tax regime prior to TCJA, the domestic balance sheet was required to pay for acquisitions, buyback, payroll, fill in the blank, anything and every expense. And I liken the international balance sheet to essentially a tax deferred account, where Microsoft wasn't 59 and a half yet and didn't want to pay the penalty to bring it back and use it. But what had happened over time with that very successful allocation is that we had a large amount overseas and a relatively small amount on the domestic side. And we ended up having to get very good at cash flow forecasting because not many people appreciate this, but I joke we were beginning to lead a hand-to-mouth existence in the U.S., meaning as the money came in on that domestic side, we were paying bills, and it was getting to a place where we were going to end up really having to borrow money. And the trigger for that was actually the stock price at the time. So if you recall the dot-com crisis, that sort of hit Microsoft before the other technology companies in the form of the antitrust trials. And as a result, there was very little appreciation with the market of the Microsoft stock price. And there was a broad feeling that the stock was undervalued. And we were convinced of that and able to launch a tender offer that would really declare to the market that we wanted the shares at these prices. And as a result, it was fascinating because some people did not want to use up the precious domestic balance sheet and do such a large $20+ billion Dutch auction. And others were highly motivated and interested and understood that what that was going to do was lead us into borrowing money. And the reality is that the market was very suspicious because they did not want to sell to Mr. Gates and Mr. Ballmer because they figured they knew something. So in market parlance, our Dutch auction was rather unsuccessful because the participation rate was so small at the lower price, the stock price rallied. And so we didn't even end up using all the money we had earmarked for it. Some say that's a success because we were able to hold the money and had an important signaling event. Others say we should have been more aggressive and been able to increase the range so that we had brought the shares in as armchair quarterbacks will look at what's happened subsequently. But that really led us onto the fact that we were going to have to borrow money, and ended up in a world where we hadn't been before. We hadn't worked with credit rating agencies. We had issued, just when I arrived in 96, we had issued a convertible where the then rating agencies and agents were not convinced of our essentially our credit worthiness relative to the rating we ultimately achieved. They designated us AA minus, I believe, and said we could work our way up with good behavior. And I think the then CFO didn't appreciate that. So we had really not worked with rating agencies for almost a decade. And so I went on hand and knee to New York, and we ended up really convincing and telling our story about essentially what the overall balance sheet structure looked like and our plans. And it was really I think a precursor to what people saw prior to TCJA, where we were going to do buyback, we were going to do acquisitions, and we were going to borrow money. And we, at the end of the day, had a diversified business that was able to sustain things even in downturns. And the business model transitions that we were going through in terms of what's commonly referred to as SaaS today, it were the smart thing to do, et cetera. And so we did achieve the AAA rating, launched our first debt issuance right before the credit crisis. In fact, I remember our first attempt at a launch of a debt issuance. The morning of, we came in, and I don't recall specifics. I could go back and look, but it was either, let's just fill it in, the morning of Bear Stearns or the morning of Lehman Brothers, or one of those events. And I was all prepared for the bank to say to us, "Oh, you should go ahead anyways." And to their credit, they caught us completely off guard and said, even as strong a name as you are, we don't think anyone should be going to market today. So our first attempt at issuance was denied by the market window closing. And that was informative to think about how you weren't able to borrow because of certain reasons beyond your control, exogenous reasons. And very informative in terms of how we did our asset liability management going forward. But I do recall a conversation with the CFO saying, what happened? Do we have egg on our face? And I said, nope, nobody really knows that we were about to launch. But at the end of the day, we didn't into this. And we did achieve a good outcome on that, and continued. What most people don't appreciate is later in the mid-teens, we were nearly broaching $100 billion in debt with a combination of our commercial paper. So when people don't think about Microsoft doing asset liability management, I always have to pause and say, this is actually something that was so well done by the team that no one externally and sometimes internally actually appreciated it. So I think that when we talk about when you first got the seat, that was one of the big challenges, is coming up with a huge capital plan and for the long term, given our structure and the tax regime at the time and Microsoft's needs.
Yeah, that's great. Reflecting on that, thinking back to some of those events, I love the timing story. As you kept referring back to the random walk and the long look back. In terms of, think about people on their way to becoming senior finance or senior treasurers of organizations. What's your advice to them? You've given some examples about a broad look, technical expertise, being able to be part of the overall organization. What would be some of your highlights to make recommendations on?
Right. Well, this is sort of I waxed philosophical. I apologize a little bit there, but to get to the punchline is, as we were, now in the full blown credit crisis, as you may recall, or others might, the reality is that you woke up daily and really were being questioned on everything. And there were, I recall headlines where, people essentially had liquidity problems. There was one where they had a stick figure walking the plank for the Bristol Myers Squibb treasurer, because I think he was locked in somehow they were in auction rate preferreds at the time. And every morning we could tell what was going to happen probably to Morgan Stanley, because we'd be asked about acronyms that showed up in the paper a day later, because one of our board members, or the chair of our audit committee, was also chair of the Morgan Stanley audit committee. And so we'd go scrambling to go figure all this stuff out as quickly as we could and get back. And, the truth of the matter is that the data was everywhere. We had to pull it together, go through it, and unfortunately, a lot of times when we were just trying to make sure that it was right, and you had to, back then, you really had to go find the person or the analyst or the manager who had the Excel spreadsheet on their laptop. It wasn't in a repository or anything along those lines. And pulling it together was a challenge. Cutting and pasting to PowerPoint was a challenge. Transpositional errors always had to review to make sure it was accurate. That was one thing. To go back to JF, his precision was amazing. So we learned a lot to get that right. And that took time, as you might imagine. And the longer it took to from when the question came from on high down to send it back up, the more people fretted, assuming something was incorrect. And the reality is that from that experience, we really learned how to aggregate the data in a way that was quickly turnaroundable, is a very technology-driven term there. And
like nimble or fast.
The predecessor to Power BI was Power View. So we really started using Power View to come up with all sorts of exposures, because you can recall in the credit crisis, counterparty exposure was huge. You'd come in one week and your failover plan was because, Citi was going under. And then since your failover plan relied to, failing over to fill in the blank, maybe Bank of America the next week, that next weekend they were supposed to be going under. And so you were constantly in this mode of having to come up with risk mitigation plans, but also counterparty exposure became hugely scrutinized. And we were able to develop a view of counterparty exposure that included not only the cash, meaning the cash in the bank accounts, the investments, which at the time were in fixed income, equities, and alternative asset classes, but also, since Treasury included the credit and collections function, we incorporated our AR as well. And so we were able to take a look and figure out not just who we should or shouldn't be trading with given our exposures, but also who we should start to worry about who hadn't, for whatever reason, been paying in the last 30, 60, 90 days in terms of, who we should go to collect from and figure out what was going on. And ultimately, by aggregating the data, we ended up being able to turn around answers. I remember the UK, the Brexit vote it was in June, and I happened to be with one of our investment advisory committee members in Boston, visiting him and Fidelity. At the time, he was CFO of Fidelity. And that morning, I got a little bit of a head start, but the best part about it was that our Power View at the time, but effectively Power BI, which for those that aren't familiar, it's a data analytics package. We were able to pull up and just do a quick shock test in Power BI, which is sort of one way to think about it is interactive PowerPoint. And at the end of the day, turn something around before anybody asked the question, what was the impact to our portfolio? And that was just a huge internalization of not only thinking about, and to go to your question, the data-driven nature and specific to your questions, how to think about things in where data skills were really important. And I would recommend to folks that, and I actually have said to the people that I've worked with that these data skills, if you sort of fast forward, I don't believe that data scientists are a unique breed. I think they're out on the bleeding edge, but those skills over time are going to be acquired by, let's just say, regular finance people and in particular Treasury folks that I'm referring to. And those are the skills I believe that are differentiating people today versus necessarily just being able to open a spreadsheet. Opening a spreadsheet is table stakes to get into finance today, right? And the reality is data analytics and visualization and how to think about all those buzzwords that people talk about are derivatives of this, like digital transformations, etc. But I guess I should be cautious. This, again, long look back. It's not because I was somehow prescient in the way that we were managing ourselves. We were driven by circumstances. In fact, I sort of caught myself there, and I was reminded because in 2014. This was well before people were familiar with Azure, let alone cloud. We ended up having a dramatic IT meeting, whereas even at Microsoft, we were always asked to be more efficient. And our IT funds, and we joked at the time, there's the run and build portion of the budget, and build was always the cool things that you wanted to do. Run was keeping the lights on. And literally because of broader finance priorities, and reasonable things. I mean, I recall there were a couple new accounting standards that needed to be adopted. There was a bunch of other things, and our run budget, forget the build, but our run budget was decreasing. And so the joke at the time was we were going to have to look around to figure out which light bulbs to unscrew. And this is actually, again, to the point of not being prescient, what got us to embrace Azure Cloud. We did it for the cost savings at first. The cost savings, I recall, it's somewhere in the neighborhood. We reduced our server footprint by 2/3. And as a result, we're able to simply by not having everything, on-premise server-based, to save 25% of our budget, which was dramatic for us because it's not a huge budget. And the truth of the matter is that if I look back, that's not the reason I would do it again. The reason I would do it again is because we ended up, and I didn't know the word at the time, but we effectively ended up creating a data lake. And the data lake really was this essentially unstructured database that put all of our things in one place, our data in one place, where we were finally able to access it. And we didn't have to call, I don't want to pick on someone named Joe, but it's just a Joe, and say, hey, where's this spreadsheet with the rev hedge stuff, and call someone else and say, where's your spreadsheet with the cash exposures to the banks, and so on and so forth, because it was all together, and we were funneling it up into these Power BI reporting at the time, and it really made us not just more efficient, but it made people very excited about what they were working on. And I recall, at the time there's this whole analysis paralysis. We're spending all our time cutting and pasting and transposing to PowerPoint and footing these rows and columns, and we went from that being, I would say, the lion's share of the job, to more people being able to do analysis that was value added. What should we do based off of what we're seeing with the data, as opposed to just making sure it was correct? And that actually created a huge opportunity for us to even leverage this with other groups, and so we were able to become super relevant, and it kind of built on itself. So, for example, I recall we started using AI early, machine learning, for predicting the cash, as opposed to asking the controllers what their needs were going to be for our hedging. The global controllers in the various subsidiaries is what I'm referring to. And the aspects to that lent itself well to helping FP&A with cash flow forecasting, using some techniques with EPS predictions that were offered to the street, that really kind of created a momentum. I recall one not at all feeling responsible for it, but someone created an interesting view of the Federal Reserve. The only reason I figured out that happened is because Azure's billing went up dramatically in 1 month over month, and I tried to ask people what the reason for that was. It turned out someone had downloaded the entire St. Louis Fed database. And they were doing predictive, reasoning, modeling off of all of this, because at the time, it wasn't inflation that was the statistic everyone was tracking. It was always the jobs number. So every Friday we had a prediction on the jobs number, and even as a result of that, implemented what in the end was basically what I would refer to as a trend following system, but it was a predictive trading methodology that we used to position ahead of the employment report and then take it off after. It was terrific because ultimately we ended up attempting to license that to some third parties to use essentially as a model for trading. I guess my point is that circumstances, as opposed to being prescient, led us into this virtuous cycle where the journey for a digital transformation really led to people being able to have more fulfilling careers, as well as being viewed across the organization as being helpful, value added in ways that you couldn't imagine. And that's what I would suggest for people to answer your question. I mean, one of the amazing things that early on, Cortana is the voice recognition thing. I remember one team member doing analysis of earnings transcripts using Cortana, and even running our earnings transcript through it early on in order to understand sentiment, as well as basically what other people, trends other people saw based on the number of words they were, number of instances, the frequency of certain words. That individual's actually gone off to, I think, be a professor over at Harvard now.
Those are some good stories. I like the one about the loading the St. Louis Fed database in there. So maybe you didn't quite get your 25% savings that month. You're like, wait a second, You downloaded the entire internet. And we got to pay for that. That's awesome, George. George, thanks so much for your input and your time today to talk about your career and different guidance for people in Treasury. Thank you so much.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.